Welcome to video number 2. This is Matthew Baker again with Goosehead Insurance, your local independent insurance agent in Issaquah, Washington. So for video number 2, we're now going to be focused on the homeowner side. If you didn't see video number 1, go ahead and find that one where we talk about ways to beat inflation on the auto side. Now we're going to be talking the homeowners side. So let's go ahead and get into it here. My first tip to make sure that you are beating the inflationary storm on the homeowner side is simple yet often misunderstood. Ask your insurance agent if your policy is for replacement cost. We're going to put that in big letters there, RC, replacement cost. So when you buy a homeowner's policy, I think most people assume they have it covered for RC, but a lot of people are actually covered for ACV. This stands for actual cash value. The difference between the two is massive, especially nowadays, because we all know that everything costs more. So you want to make sure that your policy is covered for replacement cost. That means that over time, as things become more expensive, your house is able to be insured and rebuilt to replace it. Right? So if you bought a house that cost $200,000 to build 20 years ago, it's not going to cost $200,000 today, right? It's going to cost way more, maybe even $500,000. So you want to make sure that you're covered for replacement costs so that if something does happen, you're going to be made whole again. If unfortunately you have an ACV policy, that means that the depreciation over the years will eat away at how much your policy is worth. Okay. Tip number 2 kind of goes with this one, but this is a step above. Make sure that you have yearly inflation guard coverage for your homeowners. All right, inflation coverage. Not every policy has this built in. This is one that I would definitely ask your agent about right now. Say, hey, Mr. or Mrs. Agent, every year that my policy gets older, every year that it renews, how much is the coverage going up to beat inflation? So when you have inflation coverage on your policy, as an agent, I can select what percentage I want it to go up every year. So for example, if we have a policy that is covering a house for $1 million, if we have inflation coverage on there, let's say at 6%, at the end of year 1, now your policy is not covering for just $1 million. It's covering for 6% above $1 million. And then the next year, it's 6% above that number, right? So every year it goes up with the inflation rate. Now, this is super important right now. If you don't have inflation coverage, then a few years from now, if something happens to your house, you're not going to have enough money to go ahead and rebuild it because inflation is eating away at the cost. It's eating away at the purchasing power. So make sure that your policy keeps up with inflation. With most companies, you can select a percentage, as I mentioned a little bit ago. I normally recommend at least 4 to 6% that it goes up every year. Okay, the third way that we're going to go ahead and try, on this one, we're going to try to save some money versus looking at coverages. Let's go ahead and talk about your deductibles. So in video number 1 with auto insurance, I talked about deductibles there. We're going to talk about it big time here with homeowners. So once again, DEDs. Let's look at your DEDs, your deductible. Now with your homeowners, your deductible is a huge factor. As we talked about in video number 1, the lower your deductible, the higher your premium. A good question to ask yourself would be, how much damage needs to happen to my house before I would even consider putting in a claim? And that can help guide how much your deductible should be. So when I look at somebody's policy and they have an old school $500 deductible, or even nowadays $1,000 deductible, a lot of times I'll ask them, I'll say, Mr. or Mrs. Client, if you had damages to your house that were $1,000, would you put in a claim? And most of the time they say, no, it would have to be higher than that. And I say, okay, perfect. How about we look into raising your deductible so that you can save some money knowing that you're not going to put in a claim, right? So Typically, what we see nowadays for deductibles for a lot of houses is either a percentage of their coverage, so a 1% deductible, a 2% deductible, or they go ahead and set their deductible at a minimum $1,500 to $2,500. Now, this is highly personal. This is a conversation that we'll have. Make sure that you are with a deductible that you're comfortable with. What I will let you know, though, is that a lot of deductibles out there in today's world are pretty low, and it's causing your premiums to be inflated. So go ahead and check out your deductible. Let's talk about a few coverages that I see on insurance policies that may be good coverages, but you may not know that you're probably paying for these coverages, and perhaps you don't need them. Once again, standard caveat, let's have a conversation to really make sure you need or don't need these before you make any changes to your policy. But I do want to point out at least a handful of coverages that are pretty standard nowadays that you are paying for. The first one, ID theft. Yes, that's correct. ID theft. Most homeowners policies are throwing this on there without you even knowing. So this can be great, but for a lot of you, you may have this through your cell phone carrier. You may have ID theft through something like a LifeLock, right? So maybe you don't need to pay for it again on your homeowner's policy. So go ahead and ask your agent about ID theft. Another one is matching siding. Now, without getting too technically detailed here, matching siding is an endorsement that you pay for. Oftentimes it's thrown in there without you knowing. That if you have siding on your house, this endorsement makes sure that in given a claim situation, you don't end up with one side of the house with one type of siding, another side with another. Okay, it gets a little bit more complicated than that. But for a lot of you watching this video, you may be thinking, well, I don't even have siding on my house. And that's exactly my point. Not all of you are even going to need an endorsement like this. So go ahead and ask your agent if you're paying for it. The third one I want to talk about is equipment breakdown. Okay, equipment, we're going to put B down for breakdown. Equipment breakdown, another endorsement a lot of you are paying for. This covers large mechanical apparatuses related to your house. Sometimes it could be your air conditioner, it could be your furnace. It depends on the carrier, it depends on the policy. But for a lot of you, you're paying for an equipment breakdown, meaning if that equipment were to have a power surge, then you could be reimbursed for it. It typically doesn't cover just wear and tear, okay? A lot of people I talk to, they have like a American Home Shield type policy where they already have coverage for their equipment. So maybe they don't need this on their homeowner's policy. So go ahead and look out for this one. And then I would say the last two I want to talk about, these I definitely see a lot as being a little bit superfluous to what most people need. It's going to be how your outbuildings are covered. Sometimes this is referred to as other structures. So your outbuildings, how much coverage do you have for structures that are not part of the main house? An example would be a shed in the backyard. It could be a kitchen that you have in the backyard. It could be a basketball court, right? A lot of people have these outbuildings, but a lot of people don't. Or if they do have them, they're like, you know what? If my shed burns down, I don't really care. I'm not going to replace it, right? If that's you, go ahead and take a look at your outbuildings. A lot of old insurance policies, especially, they just give you a cookie cutter amount of coverage for outbuildings. It can be in the tens of thousands of dollars. So that's tens of thousands of coverage that you're paying for that you don't even really care to have. Okay. And the last one I want to mention is take a look at your personal property amounts. So we all know that a homeowner's policy includes coverage for your house, right? One of the other things it includes is coverage for your personal property. So think of your personal property as your things, your furniture, your clothes, your TV, right? We all undoubtedly have some personal property that needs to be covered on our homeowner's policy. But once again, a lot of old school cookie cutter policies pigeonhole you into a specific amount of personal property. 9 times out of 10, it's a lot more than you need. Let me give you an example. Let's say you have a house that has replacement cost coverage of $1 million. On a lot of old policies, that means that your personal property would be as high as $750,000. Undoubtedly, almost everybody I speak to, whenever I say, hey, you currently have X amount of personal property, they say, holy cow, Matthew, there's no way I have that much stuff. Can you reduce it? Now, with the carriers I work with, the answer is yes. I can highly specialize policies. And that's one of the reasons why I show you all these individual coverages that a lot of people are paying for. In their current policy, they have no way of reducing them or no way of getting rid of them. A lot of carriers, if you don't want 75 or 750,000 in personal property, they will just tell you, oh well, there's nothing we can do about it. But with the carriers I work with, we can freestyle, we can change deductibles, we can change personal property, we can remove things like equipment breakdown. It can trim your premium quite a bit so that you're only paying for what you need and not what they want to put you into. And guys, I would say that the last way that I'm going to bring up where you can really save some money and really take a look at your coverages is working with an insurance professional like myself over at Goosehead Insurance. Once again, over 20 plus carriers that I work with, we can customize your homeowners insurance, your auto, any other lines that you have to really make sure that you are not only getting discounts, but that you're not paying for coverages that you don't need. So guys, go ahead and fill out that appointment request. We'll go ahead and get 30 minutes booked. We can take as much time as you need, less or more than 30 minutes. And then I'll go ahead and get you on your way to taking advantage of the current inflationary period and making sure that you're not paying more for what you need or paying out of pocket. Okay, see you at the next video.